Welcome to a high-speed, dynamic teardown of a truly powerful financial dashboard. If you've ever felt completely overwhelmed by the relentless noise of the stock market, well, you are in exactly the right place. Today's explainer is a rapid-fire X-ray of the BRRNN SWOT and DVM screener. We're going to dive right in and see exactly how this specific tool cuts through the chaos to find the actual signal.
So here's the immediate challenge. How on earth do you filter 500 stocks in just 5 seconds? That is literally the ultimate problem faced by every retail investor today. Market information overload is incredibly real, and quite frankly, it can be totally paralyzing. You've got thousands of tickers blinking red and green, literal mountains of financial reports, and a nonstop news cycle. To survive, and more importantly, to uncover actionable insights, you absolutely need a system that distills that massive ocean of data down to a single, highly readable snapshot.
Enter our weapon of choice for today, the BRNA SWOT and DVM dashboard. Now sure, it might look a little dense at first glance, but it's actually an incredibly organized view of actionable market data. Custom built to take that chaotic market noise we were just talking about, it translates all of it into a highly structured, immediate view of potential targets. Right off the bat, to anchor ourselves in the macro context, the top of the interface reveals our targets, the NIFTY 500 and the BSE 200. These are major Indian market indices representing hundreds of the most significant and heavily traded companies. Instead of manually combing through each and every one of those equities, this screener is doing all the heavy computational lifting. It instantaneously narrows down an enormous universe of possibilities into a highly targeted list. But, before we hit the hard numbers, we really need to decode the name, SWOT and DVM. What does that first part actually mean in this context? Well, a SWOT analysis is a classic business framework evaluating strengths, weaknesses, opportunities, and threats. The crucial takeaway here is that this screener isn't just crunching raw, cold price data. It's actively attempting to evaluate a company's real-world competitive standing, beautifully blending fundamental qualitative context with strict quantitative metrics. Okay, so the engine driving this whole list basically relies on two distinct metrics, NOT and DVM total. The NOT score, which is a proprietary descending rank, acts as our primary filter. You can spot a tiny downward indicator arrow right next to the word NOT. And right beside it, the DVM total acts as a proprietary aggregate secondary score. The dynamic interplay between these two distinct metrics is exactly what successfully surfaces the absolute top contenders out of those 500 stocks.
Let's isolate the absolute peak of that list to see the primary sorting engine in action. Up top, we have Uflex boasting a NOT score of 46, followed closely by Modison at 45, and Apcatex Industries holding down the number 3 spot at 44. By strictly filtering for the highest NOT rank, the dashboard instantaneously feeds us these 3 prime targets before we even have to scroll or click a single button. It's a massive time saver.
Rapid fire time. Let's decode the tags. Now that we've got the top-level numerical ranking down, it's time to shift our pacing into high gear. We're going to see how algorithmic tags basically turn a standard spreadsheet into a dynamic visual map. Starting right at the top with Uflex. Directly under its ticker symbol, the screener instantaneously flags a vital profitability trend with a bright orange tag that very clearly reads margin growth. Look, in a high-speed market environment, you simply do not have the time to dig through 50 pages of quarterly earnings reports just to figure out if a company is becoming more efficient. This orange tag screams that Uflex is actively expanding its profit margins, delivering that insight to you immediately. Moving rapidly to our number 2 stock, Modison. Here, the dashboard hits us with a really striking green tag, 10-year high. Now, green is typically associated with positive momentum or bullish price action, right? And in this specific case, it signals a massive, decade-long historical price milestone. Instantly, just by glancing at the color and the text, you know Modison isn't just trending upward for the week, it's actively breaking incredibly long-term historical resistance. Flashing down the list to Deep Industries, currently sitting at a NOT score of 43. Look at its bold orange tag, dividend. For an investor who's heavily focused on immediate income-generating potential, rather than just pure growth, this tag is an absolute beacon. The screener categorizes this key fundamental trait front and center. This means you can visually separate your growth plays from your income plays immediately, which completely streamlines your entire research process. Finishing up our rapid-fire sprint with Gujarat Narmada, or GNFC. Just like Modison, it sports a distinct green tag, but this time highlighting a 52-week high.
This perfectly completes our look at the dashboard's quick glance insights. By utilizing simple yet highly effective color coding, like orange for fundamental business trades and green for pure price momentum milestones, the screener successfully feeds you highly complex data at absolute lightning speed.
So, zooming back out for a second, what actually makes this interface so undeniably effective for the focused learner and investor? It's the engine underneath it all. It perfectly blends those specific color-coded qualitative tags with the hard, uncompromising quantitative scores of the NOT and DVM total columns. You aren't just getting a raw, context-free list of numbers, and you aren't just getting some disorganized feed of news alerts. You're getting a highly synthesized, dual-layer view of the market.
And here is where that dual-layer logic gets truly fascinating. Notice the number 220.8. This is actually the highest DVM total visible anywhere in our view, and it belongs to Goodreek G. But wait, here is the catch. Goodreek is sitting all the way at the bottom of our list because it has a slightly lower NOT rank of 41. This brilliantly illustrates that while the NOT score drives the primary sort, the secondary DVM total acts as a powerful safety net to reveal hidden strength. The screener's complex logic flags Goodreek as a massive aggregate powerhouse, even if it didn't strictly win that primary sorting filter. Which brings us to the ultimate takeaway from today's explainer. We've seen exactly how dynamic tools like the BRA dashboard use rapid descending sorting, secondary aggregate scoring, and instant visual color tags to conquer the absolute chaos of massive indices like the NIFTY 500. In an era where data is literally infinite, but your actual time to act is severely limited, you really have to critically ask yourself, what is your algorithmic edge in a market of overload? Are you still manually digging through the noise? Or are you utilizing structured visual data to do the heavy lifting for you? Keep that in mind the next time you open up your portfolio.